Well, while we were at that entertaining interview with Mr. Mark Faber, the market slipped a little bit more. The mid-cap index is now 1.25% down. So whether you look at the Nifty 50 or you're looking at the Nifty Bank or the mid-cap, all the indices are at their day's low. So as we enter the last half hour of trading, that's not a very good sign at all. Compelling weakness, no matter which index you pick. On that note, let's invite more technical experts. Sandeep Wagle joins us now. Sandeep, your trade for the last half hour, will it be for the last half hour, or you want people to carry it on?
Afternoon, Lata, I would carry it on. I think I see the Nifty nearing 8450 and I don't see 8600, 8620 being crossed on the upside. So I would be a seller on any bit of an up move that comes in. Stock specific, a sell in a Hero MotoCorp, stop loss 3458, target 3284. A sell in a Havells, stop loss 437, target 401. And a buy in a ICICI Bank, stop loss 250, target 276.
Okay, well, the market is now sinking some more. So the Nifty has moved to the lowest point of trade, down about 72 odd points, not looking good at all. And in fact, the volumes are also piling up. So now the total volumes have surged to more than 3.3 lakh crores. Big cash market volumes coming in as well, more than 17,000 crores. And the Sensex is advancing towards a 200-point cut. We have Mitesh Thakkar who also joins in. So let's get a quick comment from him. Mitesh, how are you reading the fall in the market today? And what are the stocks that you would be shorting, if at all, or any trades for the last 1 hour?
We've been calling for some kind of decline in the markets for the last few days, and today I think what we are doing is that we are breaking that 85.50, 85.40, which is acting as a minor pivot. Having done that, I think 84.60 is the first target, but overall I think this index is heading lower, and we are looking at around 8400 to about 8360 as the next support zone. So I think there's still about 2.5% kind of cut which can happen. I think on the stock side, I have few sell calls. The first one is a sell on Lupin with a stop at 1470 for targets of 1410, and NCC is a sell as well with a stop at 82.5 for targets of around 75.
Okay, thanks for that, Mitesh. Well, Mayuresh, wanted to ask your view on this SR deal. We have done a lot about banks and with bankers. But Rosneft is the first big competition in the hydrocarbon space. Does that alter your view of, say, Reliance or anything in the petrochemical space in the medium term?
Good afternoon, Lata. Again, I think with Rosneft coming through, I think the competition will definitely increase. But again, I think you look at the efficiencies that Reliance is trying to bring into its core businesses of refining and petchem. With expectations of their plant starting in, both on the petcoke gasification in the next few quarters, I think the efficiencies will definitely kick in on that side. Secondly, I think if you look at the refining part of their business as well, you're probably looking at the spreads improving thereof as well. The GRMs have seen some uptick in the past few weeks, and because of efficiencies kicking in, because of better complexities, I think the refining margins for Reliance should also improve. A large part of their capex, Lata, is now behind them. So the kind of subdued ROEs that we have been witness to Reliance over at 515 and 17 would largely be behind. So it is all going to be a expansion mode now from FY18 onwards. The telecom part of the business is still not accounted for, but largely I think their two core businesses should start delivering exceptionally well over the next couple of years. So competition might be there, but I think the efficiencies for Reliance will stay.
Okay, well, the mid-caps have sold off quite a bit. In fact, that's the thing you worry about when the markets start to fall, the fact that mid-caps stocks will see a bigger gash. So stocks like CEAT are now down almost 7% and big volumes getting traded on the downside. But talking about mid-caps, it's time now for our Monday special Mid-Cap Mania. Nigel D'Souza is here, and the stock on his radar is a white goods company. Anyway, the sector is doing very well. This company has been expanding its presence in the AC industry. Nigel, take it away.
Well, Sonia, that's right. But in fact, it was not always a consumer durables business. Before, they used to supply components to various AC makers as well. So currently, the consumer durables business is nearly around 60% of their total revenues. But they also have the heat exchangers as well as various components that they have been supplying to various AC makers. You pull up a chain and you'll see that they have been moving into forward integration. So prior to this, they only produced the coils and exchangers. Then they were supplying to various AC as well as refrigerator manufacturers. And now, in fact, They are into the consumer products business, and that's really where their big focus is. You just take a look at their growth. In the last few years, the consumer durables business, which is nearly 60% of their total business, has moved from 200 crores to around 1,400 crores as of the last fiscal year. To break up their consumer business, then the 1,400 crores, there is some inter-segment, between them as well. But the AC business, that is 60% of around that 1,300 crores, approximately. TV business as well accounts for around 25%. But let's look at the market share then that they're currently enjoying. Currently, it is at around 14%. Lloyd's AC is at around 14%. Market leader, as we know, is Voltas. But you take a look at it, and in the last 5 years, they moved from absolutely zilch market share, that's zero market share, to around 14%. So they have been making progress. You also pull up the TV market segment, and in fact, you'll see there they have a market share of only around 3.5%. But there as well, they moved from 0 to 3.5% just in the last few years. Moving on then, we'll try to do a peer comparison then of what they have been doing. That's 3.5% that they hold currently in the TV market business. And over here, they're looking at more focus in the TV business because that as well is a growing segment as well. Yeah, the EBIT margins are up for you on the screen. Voltas does around 13%. They're lagging. They're doing only around 8%. But if you take a look at the ROCE as well, over there, they're doing around 45%. Voltas, they have negative working capital. So in fact, that's not applicable. But otherwise, not too good, not too bad as well. The PE basis, if you take a look at it, then it's looking rather attractive. It's looking at around 12 times. But there's a reason why it's not getting the premium valuations that the other players are getting, because they have a debt of around 900 crore rupees, which is not very comforting as well. But there was this announcement on the BSE, and they're saying that now they have appointed EY, and they're looking at optimizing shareholders' value as well. So we are waiting for that report. So it could be a tad bit interesting as to what they will do. We're not going to speculate, but let's try to value their consumer business then. Last year, they did an EBIT of around 106 crores on a capital employed of around 240 crores approximately. And the total EV, that's 1,100 crores plus 900 crores, tells you that it is at around 2,000 crores. But pull up the FY16 numbers, they'll come up for you on the screen. And if you just give a multiple of around 10 to around 15 times, then it's valued at around 1,000 to around 1,600 crores. Let's get the next plate up for you. You're valuing it on an EV upon EBIT basis around 1,000 to around 1,500 crores. Just looking at it, an EBIT of around 105 crores, you deduct tax as well as finance expenditure, assuming that the entire capital employed is a debt of around 250 crores. You get a profit number of around 55 crores, and you give it a multiple of around 20 times. Then, in fact, it's valued at around 1,000 crores approximately. They've got a couple of orders as well coming in from the locomotive segment. Promoters have increased stake because they converted some warrants as well. And it's quite an interesting play going ahead. However, they haven't paid dividends, and that's not very good news. As per dealers, they suggest that post-market sales are very good, and that's why that market share has been growing. Thanks a lot.
Okay, thank you. That's, as the jingle says, Lloyd Lao Khushiyan Badhao. It now looks like Nigel is saying something like that about the Lloyd stock. Not his recommendation. I'm just referring to the ad itself. So that's an analysis of the financials of Lloyd Electric look underpriced at this point. Well, maybe we should take a break on that note, allow you to mull over those numbers. We have more market strategies lined up for you.
Welcome back to the show. Well, the markets are still under pressure, but those are Orient Paper's numbers. Looking quite good, actually, and the stock is rising. That's because the company has turned around. It's posted an EBITDA profit this time and a profit on the net basis versus a loss on a year-on-year basis. And I was just looking at the press release as well. Both quarter-on-quarter and year-on-year, it's been a turnaround. So that's the reason Orient Paper is up in the green. Mr. S.P. Tulsian joins into our conversation. Mr. Tulsian, before we ask you about some of the other stocks, any thoughts on Orient? It's now up almost about 4% odd.
Sonia, all the paper companies are going to report very good numbers, because if you take I wish to draw attention here of the viewers that we need to look to the paper industry in two parts. One for the writing and printing and another for the craft paper. If you see writing and printing, because of the 3 plants of built having closed, there is a very good offtake with the pricing power. And coming on the craft paper, because of these e-sales and the kind of consumption which you have seen in the boxes and packaging, that is also seen to be giving very good margin. And mind it, in the craft paper, you have a very low cost of production. You don't have pollution problems because you don't have to bleach the paper. So what my point is that overall, all the paper stocks are going to report bumper results, and that is what I have been saying, that it is only the matter of analysis that how much growth and what efficiency has been posted by each company. So similarly for Orient Paper, it goes in the same way, that the results are looking really good.
Okay, actually, as you were speaking, Mr. Tulsian, Mr. M.L. Pachisia, the Managing Director of Orient Paper Industries, has joined us on the phone line. Mr. Pachisia, this is indeed very good numbers, a turnaround for your stock from an EBITDA loss of 6.5 crores to an EBITDA profit of 21 crore.
Okay, Mr. Pachisia, all the best for the next couple of quarters, and once again, congratulations on a good showing this quarter. That's Orient Paper, the mid-cap of the moment, up more than 7% but we need to get back to the markets because there is no recovery in sight just yet. In fact, it seems like we're going to close at the low point of trade, which is not a good sign for the bulls. We still have our guests with us. Ashwini, wanted your quick thoughts on the way the market is shaping up. You did mention that there is expected to be further downside, but now we are seeing pockets of weakness open up even in sectors like cement. Auto stocks are down and out quite a bit. How would you trade these pockets?
See, everywhere where there are profits, they will get taken out, and you will see serious profit booking even in mid caps, which haven't really fallen in this entire decline. So anything that's run up 20, 30, 40% over the last couple of months is going to come under the hammer. For example, the tire stocks, you still have 300-400 points to go. The mainline stocks have done a lot of correction, but mid caps still to go today. Everything is getting camouflaged by ICICI Bank. If that wasn't the case, you would see stocks fall much harder and the market fall much harder. So maybe tomorrow will be that day of reckoning when ICICI is out of the way, but clearly you shouldn't expect the market to stop before 8200.
Oh, that's not sounding good at all if you're a bull. There is one set of bulls who would be happy today, and that would be the ICICI Bank bulls. The company's, the bank stock is now up 6% after that SR Rosneft deal, which is expected to give SR about 6,000 crore. That figure was not quite confirmed by Chanda Kochar, but nevertheless, listen in to the conversation I had with her just a little while back.
It's difficult for me to talk specific numbers for specific cases, but yes, the immediate benefit is that the debt to SR Global gets resolved, and also ultimately, of course, the debt of SR Oil will become a non-SR Oil, non-SR Group exposure. So in a way, almost a little over 50% of ICICI Bank's exposure to the SR Group either gets paid or gets transferred to a non-SR company.
Okay. Now, I just wanted to check whether SR Global and SR Oil were in your watch list. So, therefore, does your watch list shrink? And by how much? What, 10%, 20%?
So again, SR Oil is not a part of the sectors that we had disclosed in our drill down list.
Yes.
But yes, we had included the promoter entities in the drill down list. Yes, the watch list or the drill down list does go down to some extent. But I again won't give you the numbers. But yes, the answer is that the drill down list does go down.
Fair point. Actually, the market is extremely enthused that your drill down list can go down considerably because you are also richer by about 6,000 crores because of the ICICI Pru money coming in. Can that give you greater leeway to probably recognize, provide, and thereby bring down the drill down list?
Lata, I really want to make a point that we should make a difference between and understand the difference between recognition and resolution.
Yes.
I think in the entire banking industry now we should focus on resolution. I think recognition, a lot of it has taken place. Some more would happen as we go by, but that's really more about, accounting entries. What really is important is that we should focus on resolutions we should focus on seeing how these productive assets that have been, or the assets that have been put on the ground, become productive, remain productive, so that value is maintained. And that is what is in the best interest of the lenders. And we've really been focusing on resolution. You see, you saw some of the larger deals being announced in the past, the sale of a cement business. We took some of the...
Okay, we have to interrupt that conversation because of the Lakshmi Vilas Bank numbers. Gross NPA number is not looking good at all. It was 432 crore. It has now become 546 crore. So that's a fairly big jump, isn't it? It's about, what, 25% jump in the number itself from 431 to 546. So, it's almost a 100 crore, 110 crore jump. Yeah, it is about a 25% jump in the gross NPAs. That's looking a little eerie as far as Lakshmi Vilas Bank is concerned. So I would think this is a point of bother. The share has taken a nosedive.
Oh yes, it has. The percentage as well, right? The gross NPA percentage has risen both quarter on quarter and year on year. 2.7% gross NPA.
It's a huge rise, isn't it?
Yes, it is a big rise. And even the net NPA.
55 basis points higher is not anything to be scoffed at.
And I think that's what the stock is reacting to. Net NPAs as well at 1.8%. versus 1.3% last quarter. Nothing exceptional as far as even the bottom line is concerned. Provisions have gone up for the bank to 63, doubled. Provisions have doubled year on year and quarter on quarter to 63 crores.
The provision coverage ratio was at 66.5. Now it is 59.9. Okay, 60%. So obviously they have not been able to give 50% cover for all the new NPAs they have generated, because they would have generated at least about 100 crore worth of fresh NPAs, at least 100 crore if not more, maybe even 110 crore. That will obviously not be adequately provided for. The overall provision coverage ratio has gone down in spite of the total provisions itself increasing. So it certainly looks like a difficult set of numbers, not at all flattering, you will have to say, for the small banks. I just want to see if there's anything in terms of the NII that we have a guess from Antique estimate which said that it should be about 190 crore. Could you get the NII number?
No, I don't think they've put it out just yet. So we'll just wait by for that. But because of the asset quality, the stock is really taking a beating now. In fact, if you pull up a 6-month chart, Lakshmi Vilas Bank has had a great ride in the last 6 months. So I'm sure a lot of the profits are being taken out. I mean, in just 6 months, it moved from, 80 to 160. So it doubled in 6 months, and now money is being taken out there. Mr. Tulsian, any comments on these numbers?
Sonia, numbers are definitely looking disappointing on the asset quality, because if you see a net NPA rising by about 60 basis point or maybe exactly by about 46-47%, that will not go well. But I won't be taking this as a negative call on the bank, because we have been keeping a positive view. But you are right in saying that the kind of rise which we have seen in these few banks, maybe like Karnataka Bank, Lakshmi Vilas, Federal Bank, and they all are seem to be taking a pause now. And maybe these kind of results which have given some kind of disappointment on the asset quality, you are bound to see the profit booking. But we are not taking a negative call, merely looking to these results which are definitely dull and a bit disappointing.
Okay. Net interest income is up 16%. It comes in at 187 crores compared to your estimates, Antiques and Centrums, which was about 20% higher.
Which were about 191, 192 crores.
Okay. So NII is also below estimates?
NII is below estimates on account of, you can see the deterioration in asset quality. So that obviously impacts your interest income.
Yeah, so much of interest income could not be recognized because they have gone into NPAs.
On the other hand, while we're talking about Lakshmi Vilas Bank, HIL's numbers, margins have improved quite a bit. So the stock as well is up almost about 3.5%. Okay. But let's do one thing. Let's also get on board Varun Goel, who joins in from Motilal Oswal, and we have a whole host of experts. Mayuresh Joshi sitting by as well. Varun, hi, afternoon. The market has been grinding lower because of global concerns. What do you do at a time like this? Do you continue buying your favorite stocks, or do you wait a bit as there are big events lined up?
Well, I think 5-6% kind of correction in the markets can happen any time, and global cues or even domestic cues could be a trigger for that. At the end of the day, I think one has to look at the earnings growth. Our sense is that we will end this year somewhere between 10 to 15% earnings growth in FY17, and it could get even stronger in FY18. So we, of course, as far as high quality stocks are concerned, where we see good growth, we will continue to buy these stocks with a 3 to 5 year perspective.
Okay, let's get some BTST calls going because we have less than 10 minutes before the end of trade. Ashwini, what would your BTST calls be?
See, Z is a sell with a stop of 520, target of 490. HDFC Bank is a sell with a stop of 1250, target of 1200. And Raymond is a buy with a stop of 600, target of 640.
Okay. Mitesh, your thoughts? Okay. Mitesh, you will have to switch on your audio. Yes.
Yeah, hello.
Yeah, please. Your BTST calls.
Yeah, so Reliance is a sell with a stop at 1067 for targets of 1045. And the other one is a sell on Hero Motors, which I think you can sell with a stop just above 3425 for targets of 3375.
Okay. Well, I think today is the day we really want to know what's happening in the dealing rooms because we are ending the day at very close to the day's lows. Okay, we were at one point in time maybe one and a quarter down on the mid cap. Now we are down about 1%. So some last minute short covering may have happened. But what happened at the dealing rooms, Mangalam? What did they tell you when you called them?
Well, Lata, the one thing that is clear across the dealing rooms that I've called is the fact that there is lack of conviction on either side, on the upside or the downside, and that is what is impacting the markets. Because if you look at it, the dealers are saying that we are looking at only global cues as of now. There is lack of domestic triggers. So the global cues and US elections are two things that will be on top of everyone's mind going forward, at least in the next fortnight or 1 month. And traders are also keeping a very close eye on the developments taking place in the US Fed and across the board monetary policies across the world and the currency movements across the countries as well. And like I said, no domestic triggers. The second quarter numbers are largely seen tepid, and in light of the rally that we have seen, dealers are little apprehensive. And the only positive is the fact that all through last week, the FII outflows that we saw was mostly on account of ETFs and no long-only funds really taking some money home. They are in fact holding their positions. Today's trading session, FIIs are seen as sellers. Domestic institutional investors are on the buying side, but still again, we can expect the FIIs to outsell the DIIs in trade today. 8480 to 8500 is a strong support that the dealers are talking about. Any number below that on the Nifty could take all the bets off. And in terms of individual stocks, a lot of institutional action seen in ICICI Bank today, and tire stocks, all of them seeing some profit taking. The whisper on the street is that tire companies are likely to reduce prices or something of that sort, but some profit taking seen in the tire stocks.
Okay, thanks a lot for that. Well, that's what the dealing rooms are suggesting, but we still have about less than 5 minutes before the day comes to an end. Varun, I wanted your thoughts on what took place today in the private sector banking space, specifically with ICICI Bank post the SR Rosneft deal. That's been the stock of the day, up 7%. How are you positioned there?
Well, our sense is that the concern about asset quality of some of these large banks should begin to get addressed. One, we have seen a significant decrease in bond yields, and that is definitely resulting in big M2M gains in the bond portfolios of most of the banks, especially the public sector ones. And second, I think the loss given default scenario for a lot of these banks is going to be a lot less as compared to the numbers that we speak or talk about today. So I think incrementally those banks which are geared towards the retail side where asset quality is good, those banks will continue to deliver good shareholder returns.
Okay, so you're buying PSU banks?
No, I would think that we have already seen the worst in terms of asset quality. Selectively, we believe that we will see quality emerging. Of course, one has to be very, very careful in terms of the kind of corporate governance and the management quality. But I do believe that the worst is behind.
Mr. Tulsian, would you buy any of the tire stocks now that the prices are correcting?
Lata, in fact, I have been giving a cautious view and profit booking view. If you recall, for last 1 week when I've said that the prices have seen running too high and I don't think that fundamentally justified. And when I gave a comparative call on Kesoram that looks better if you really want to take a call. So I will definitely be keeping cautious view because the kind of run-up which we have seen will not get justified by the Q2 numbers, which we will see from all these tire companies.
Okay, fair enough. Kesoram has dipped much less than the others, you will have to see. So that stock remains strong because of the fundamentals, but a lot of steam being let out of these stocks. Mayuresh, would you all pick up any of the auto ancillaries?
No, selectively, Lata. Again, I think if you look at battery makers within auto ancillaries, I think they are looking a long-term compelling play because of the volume growth that you are witnessing in the OEM market, the replacement market doing well. But lead prices have shot up, and again, the product mix between the auto ancillary makers, specifically on the battery side, I think that looks a little bit subdued this time round. Even tire makers, as Mr. Tulsian was saying, I think the run-up has been quite sharp over the last few weeks. So largely, I think be extremely selective at this point of time because the prices have run up and valuations are looking stretched.
All right. Well, we still have, 2 minutes for the markets to close, and I think now we can be very sure that it is going to close well below that 8550 mark, 8524. That was the Lakshman Rekha, and it's remained below that level for the entire duration of trading practically. Ending with about 0.7% in terms of gain, in terms of losses. Saved the blushes. It was looking like it would end with a 1% in terms of losses, and 8,500 would be taken. But it's just saved that for another day, thanks to ICICI. That's the only stock that's contributed handsomely to keeping the index a little hydrated. Goes home with a 7.2% in terms of gains. Next to it is NTPC. Well, NTPC really behaves like a safe bank on days like this with its regulated returns. So about 2% higher on that stock. ONGC is up 0.7%. HUL 0.6%. So typical defensive play HUL. SBI is the other gainer. That is more a prospective positive that if the SR guys were to bring their probably, I mean, they make all of about 6,000, 8,000 crores, although they sold a 86,000 crore asset. What they make is only about 8 or 10,000 crore, less than 10,000 crore for sure, because so much is owed to others. So SBI up on that. Otherwise, it's a sea of red, with the maximum red being reserved for those that gained the most. Z Entertainment down 5.7, Idea Cellular 3.3, Bosch down 3, M&M, Ambuja all down 3% apiece. Even the mighty Eicher Motors down about 3% mid caps.
Well, in the mid-cap space as well, Lata, that's the disappointing bit. It underperformed today. It was down more than 1%. The market breadth was weak, and a lot of stocks came in for selling pressure. So if you look at all the vulnerable names, JP Associates, HCC, Indiabulls Real Estate, Union Bank, HDIL, GMR Infra, DLF. So whenever you see a sell-off, generally these are the first casualties, the infrastructure and the real estate space. Unitech as well, down about 3.5%. On the upside, you have SR Shipping that did very well, up almost 20-odd%. DCB Bank rallied to a new 52-week high post its numbers. Ashok Leyland has been surging a bit, so that stock is back at the 80 rupee levels. And you have a couple of other mid-caps like Built that did quite well. Built was up almost about 9-odd% or so. But we come to the end of trade. It was a bear attack today. Definitely, the start of the week was on the downside. The Sensex lost almost 150-odd points. The mid-caps underperformed, and it was only ICICI Bank that supported the index. Stripped of that, the market would have been much lower today. But let's get some final calls in then. Varun, we saw Ultratech Cement come out with its numbers today, and the domestic volumes fell for the company, so it was not as good as what one would have expected. How did you react to those numbers, and what are your thoughts on the cement space?
Well, I think incrementally things should get a lot better. We believe in the next 2 to 3 years we will see a significant ramp up on the demand side. The volume growth should get a lot stronger, and as the capacity utilization improves, even the realization side could improve. So the EBITDA per ton numbers, what we are seeing today, there is significant headroom on that from this levels. Of course, we will also have to see which geography the company is present in and what are the realization trends there. But overall, I would think cement as a space should do well in the next 2 to 3 years.
Okay. Well, Mr. Tulsian, your last thoughts on ICICI? Is it good to go more?
Lata, maybe some sentimental effect will be seen because this is seen a big positive, but actually what I'm worried about the companies or maybe the ICICI Bank's performance, that you had a news flow about 1 month back or maybe 20 days back that they have sold the exposure to SR Steel, to the asset reconstruction company. So sometimes you wonder when the bank had the information on the developments, even market was aware that group is looking to exit from SR Oil completely, because ahead of the delisting move. When the delisting move has really happened at a very hefty way. What was the logic? Why the banks are not proactive in recovering? Because you just can't create a compartment or create a Chinese wall for each company if the promoter is same. You just can't say that this exposure is to SR Global, or this exposure is SR Steel, or this exposure is to SR Oil, or this exposure is to SR Power. So I'm not happy with the conduct of the bank, which we have seen in case of ICICI Bank, and that is probably bothering to many of the analysts. You just can't focus only on this SR Oil news, which is definitely seen a positive. We will be seeing the debt getting reduced by about maybe 50% to about 45,000 crore will get reduced. That is definitely seen a positive, but I don't think that people will really are seen very happy with the conduct, on part of the ICICI Bank, and that's the reason, in fact, ICICI Bank and Axis Bank both are taking a beating and not responding to the news, which otherwise would have been very big.
Okay, so I just wanted to tell you that I got a wee bit more detail about that write-off, or rather that sale to ARC, not really write-off. That sale to ARC was their loan to SR Algoma, which is the US plant, Algoma in Minnesota. Those went into bankruptcy. So those loans are unrecoverable, and that is, at least in the near term. So that is what got sold off, I understand, in both cases. So
Lata, if you have the SR tag, all the companies can have the personal guarantee, corporate guarantee, and the holding company.
That's a separate, I take your point.
I agree. That's what I've used my word. You can't create a Chinese wall for SR Oil, SR Minnesota, or maybe SR Power, or SR Steel, or SR Oil.
The point remains that now there is hope that they will be able to get more promoter contribution into SR Steel's domestic assets, and hopefully a restructuring of that loan will be done. There is some positivity over there, but yes, personal guarantees would certainly have helped. Not taken at the right time, not given at the right time, has been a loss to the banking sector. Final thoughts, Varun, what would you be buying now that the market seems to be correcting?
No, we continue to stay quite positive on the auto ancillary space. We have seen a very good festival season so far. I think if you look at passenger vehicles, if you look at scooters, premium and motorcycles, the volume growth in all of them have been pretty robust. Auto ancillary companies, of course, continue to be a big beneficiary of this big sales trend. So we believe that companies which are on automotive cables, on automotive lighting, shock absorbers, all these companies should see very strong earnings growth for the next 2 to 3 years.
Okay, gentlemen, thank you for taking the time out as always and chatting with us about the markets. It has been a weak day. The Sensex down almost 150 points. So yes, the trend from last week continues into today as well. We'll take a short break, but coming up, Lata spoke with Chanda Kochar of ICICI Bank to discuss the immediate benefits of the SR Rosneft deal. More of that conversation lined up on the other side.